What's up, trader? Trading gold was really hard for me until I discovered these three secrets that changes the way I trade gold. Now, if you love gold trading and struggling to make money from trading gold, then this is the right video for you. I'm gonna show you exactly what are these three secrets of trading gold with proper strategy, so that as soon as you finish this video you can apply in your strategy to trade gold to make money every single day. Now, before I explaining all those three secrets with examples in the real chart, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys, so the first secret of trading gold is gap opening. Whatever time frame you are trading, 15 minutes, 1 hour, 4 hour daily, once you see that there is a gap opening from a structure, either in a continuation pattern or in a reversal pattern. Let me show you first how it works, then I'll go back to the chart and show you exactly with proper proof and example so that you can apply as soon as you finish this video. Make sure you stick till the end. Let's say any time frame you are trading gold, there is an impulsive move like that. Okay, the market moves like that. There is an impulse to the upside or downside, and then the price has create, normally after an impulse it creates a structure. Now structure could be a triangle, could be any kind of bull flag, bear flag, whatever the structure is. When you see an impulse and then a structure, normally the price break to the upside again. So if it is an upward impulse, now once you see a clear structure has been created, suddenly if you see that gold open with a gap, let's say it left a gap here, okay, whatever time frame you are trading, suddenly with a gap and then started to break to the upside, that is where high probability that gold will continue to go up. Clear and very precise price action. Now you can apply the same analogy to many kinds. It could be, this is a continuation pattern, it could be applied to a reversal pattern. Let's say you have seen a double top formation in a very important level, which is a reversal pattern. Suddenly you have seen that gold open with a gap, okay, gap down, and then has broken to the downside after opening with a gap. Now once you see this, because it's a reversal pattern on an important level, double top formation disconnected from that reversal pattern with a gap opening, there is a high probability that gold will continue to drop in this direction. Now it could be applied to any kind of reversal pattern. It could be a head and shoulder, okay, and then suddenly if you see that the price has disconnected from that head and shoulder with a gap opening, this is where that you see that gold in fact likely to drop. Now let's see quite a few examples on the real chart so that you can understand it very easily. We'll look at multiple time frames. So you see that this is 15 minutes chart already on gold. Now let me show you that example. This is the recent chart. Now first of all, look at this one here, okay. The price was coming in this 15 minutes chart, the price was coming down with creating series of lower high and lower low, and suddenly what we have seen that gold has created a consolidation pattern and a double bottom. So you see that there is a double bottom, and then what you have seen, look at this, there is a clear gap opening. With that gap opening, gold has created this bullish candle, completely has broken to the upside with this gap, and look at this, what happened afterwards, a clear move to the upside, a big impulse. Now after this impulse, gold did the same thing. What you see that the price created another structure, a triangular pattern after this impulsive move to the upside on this time frame. Now look at what happened next. After this structure, slowly gold started to break to the upside, and at some point with a clear gap opening, you can see that with this 15 minutes chart, gold has broken again in the direction of the trend with a gap opening with a strong bullish candle. Once you saw that, you can see what happened next. Look at this move here. With that gap opening, gold started to move aggressively to the upside. Very, very easy to understand. So this one is for reversal and this one is for continuation pattern. This is in 15 minutes chart. Now let's look at the higher time frame to understand exactly how this secret you can apply in your trading strategy. Look at this chart on the 4-hour time frame. The same way, as you can see, gold has a reversal from here. It's a big liquidity gap and then created this strong impulsive move to the upside. Okay, so it's a reversal. As you can see, there is a liquidity grab, big move down, and then strongly has broken out all this local trend line. Okay, completely broken out, creating a reversal, and with that impulse, and then gold started to consolidate, creating a bull flag. You can see that this is a bull flag, so it's a continuation pattern. After this big impulse bull flag, what you can expect is to break to the upside. Now in that time frame, what you have seen that in fact, look at this one here, with this a clear gap opening, gold has created this bullish candle, and with that bullish candle, look at this, what happened, gold started to aggressively move to the upside, creating a big trending move to the upside. It's a huge probability. So with that said, you can see that this applies to any time frame. So with that gap opening, in fact, gold has clearly disconnected from this structure. So let's see quite a few examples like this, and then we'll jump on to the second secret. Okay guys, so let's look at this one is 1-hour chart. Now same thing, you can see that there is a gap opening on the 1-hour chart. Okay, 1-hour candle, clear gap opening, disconnected from this structure completely, and then as soon as it opened with a gap, after little retracement, there is a massive drop happen on gold. Now as I told you that to apply this, you need to understand which way the market is likely to be heading. Okay, because if you trade on the wrong direction, the gap opening may not work. First need to understand what kind of pattern. See, when you look at this price action on the 1 hour, you see the multiple liquidity gap at the top, creating a series of lower high, long-term downtrend. So you know that this price is likely to break to the downside. But when you saw this gap opening, that is where you know that, okay, this price is likely to break to the downside, and there is a gap opening, the price disconnected from the structure, it's time to go short. And that's how you can understand the proper entry in gold based on this gap opening. Now let's look at this that you can apply in your trading strategy is daily wickless candle. When you see a daily wickless candle in a certain zone, you can expect at least 1 or 2 candle in the direction. So what do I mean by this? Let me show you that in a real chart example so it becomes easy to understand. Now you can see that this is the daily chart on gold. First of all, let me show you this candle on daily time frame on gold. You see that this candle, it doesn't have any wick at the bottom. So if I replay this chart, what you can see that there was a big drop, okay, a massive drop on gold, and then created a wickless candle, this green candle. There is no wick at the bottom, it's a wickless candle. Now when you see this kind of candle after a big move, a wickless candle, or after a big move to the upside, a wickless candle, in that case you can expect at least 1 candle to the upside. This is a bullish candle because it's a green that we can consider bullish, or after a drop, wickless candle, it can signify another push to the upside. the first thing that you can expect at least one candle to the upside. Not guaranteed, nothing is guaranteed in trading, but this is a confluence that you can use in your trading. It's a high, you need to accumulate bunch of confluences for a high probability trade. Another thing is that when you see a wickless candle, let's draw a level of support. If in case this support is broken on the daily, you can expect a reversal from this zone on the lower time frame. Now if we close this replay, what do we see? That in fact gold did that. First of all, it has broken this wickless candle support, and you see that it created a level of false breakout on the lower time frame, and then immediately has reversed and created this big move to the upside. Okay, this is a big move on gold, and if I show you quite a few examples, you see that very clearly. Let's see one more example. Look at this one here. There is a wickless candle on the daily time frame. Now you need to understand the structure, the trend. Now you see that this has created a inverted head and shoulder, and then has broken to the upside, so it's a bullish move now. Created a strong bullish candle that doesn't have a wick at the bottom. Okay, it doesn't have a wick at the bottom, which is in fact a very high probability bullish setup. And after that, look at this, quite a few bullish candle to the upside. There is another thing that you can look at this one here. This one also wickless candle. Now this candle is a red candle, but it doesn't have a wick at the bottom, so it's a bullish candle or a bearish candle. Let's replay this chart and then you'll understand. Now if you look at this is in fact a bullish candle. Why? Because you see that there is an impulse. Okay, when you see a move, you can expect a correction, and you can expect another attempt to create another move. When it will fail to do that, that is where you can say that reversal. Okay, but now as you have seen this impulse, and it is considered as correction, so it's a bullish candle. That means that after this one you can expect another impulse. Now because it's a wickless candle, what it did, if you cancel the replay, you see that the price in fact has broken that level. Okay, let's see that one here. In fact has broken this wickless candle zone. Okay, created a false breakout, and then a reversal strongly has broken to the upside. So again repeating, when you see a wickless candle, the first thing you can expect a couple of candles in the direction. Another thing is when you see a wickless candle, if the price break this wickless candle, then you can expect a reversal. Now let me show you more examples. The same thing here. You see that after this move down on the daily time frame, there is a wickless bullish candle, and after that you have seen at least one candle to the upside, and after retracement you have seen there's a big bullish move happen. Later it came back down, but will not be trading this wickless candle definitely on the daily. But when you see that on the daily time frame, you can find a good trade on the lower time frame, on the 15 minutes, on the hourly. You know that there is a daily wickless candle, and you know that what you can expect. Let's say the wickless candle has broken, then you can jump onto 5 minutes, 15 minutes to find out the reversal. If you see that reversal is formed, a double bottom, double top, you can expect a reversal, right? And when you see the price start to create a strong bullish move on the lower time frame, you know that on the daily there is a wickless candle, there is a probability that this price will go in the direction. So that's the main advantage of understanding this secret. The same thing here, you can see that the price was moving with an uptrend, creating series of higher high and higher low. Okay, so it's a bullish trend followed by this daily. You can see that there is a wickless candle on the daily time frame, a bullish engulfer which doesn't have a wick at the bottom. Now if we draw this support zone here, we see that this candle in fact manifested. You see that it's a big move happen in the direction. So these are the second secrets of understanding gold movement. Let's learn the third secret that you can integrate in your trading strategy to trade gold. Okay, the third secret that trading gold is giant candle. When you see a giant candle has broken any important level of support or resistance, you can expect the price to move in the direction of the major trend. Now let me show you again quite a few examples. It can be applied to any time frame, but the only thing you need to keep in mind, the major trend. Now giant candle could be a full body candle, okay, or it could be a long wick candle, whatever. So how do you define in fact a giant candle? A giant candle is what I tell when you see that the candle is standing out from all other candles around it, is what I called a giant candle. Let's say if I tell you to look at this chart, what candles catches your eye? Without any question, you will mark this one, okay, and you will mark this one, and you will mark this one. Probably you will mark this one. Let's forget this one here because there is a smaller candle at the top. So when you see these candles, what story they are telling to you? Let's find out one by one. First of all, look at this one here. You see this is a big giant candle that is standing out from all the candles before it, right? You will not see this after, but you see the before that candle. So what are the significance of this candle? First of all, look at the major trend. You see that the price was creating a series of lower high in this direction, in the major trending direction. Okay, so you found a candle that has been a very giant candle in the opposite direction of the trend. The major trend is down. You have seen that it has broken this structure completely, created this giant candle. Now once you saw this giant candle, are you going to short? No, because you see this same thing happen here. There is a giant candle, but the next one also has gone up. Then when do you consider going short? When you see that in fact the price came back to the range again. For example, if you draw this local resistance trend line and you see this giant candle has broken this resistance to the upside in the opposite direction, this is the trending direction of the trend. What you're gonna do is wait for the price come back to, let's, if you draw it properly, this is the local resistance zone. Okay, you need to wait for the price come back again to the range. So this is the range, or this is the channel the price was moving, right? Let's draw that. And now what you're gonna do is wait for the comeback to the range again. Once it come back, then you easily understand that this movement that happened is in fact a fake move. This is where the opportunity, this is where you can say that okay, this grab liquidity, now it is gonna reverse from here. Okay, and that is where the trading is. Wherever you are trading, from here or from here, doesn't matter, you need to keep your stop loss above the giant candle or above the false breakout, and you can target 1 to 2, 1 to 3 based on your trading strategy, but it's a huge confluence. Now look at the next one. The same thing, you can see that the price did the same. Again there is another false breakout, giant candle, broke this resistance, came back down again. Okay, look at this one, same thing. It's a long wick candle, but it's the same thing, a huge move. If you look at the lower time frame, probably in 15 minutes or 1 hour, you see long candle. So with that giant candle, in fact the price has broken this resistance level, created a level of false breakout, grab the liquidity, and then the reversal happened. Look at this, a big move happened towards the downside. Okay, so you'll find this kind of candles all over the chart in gold, and gold does this over and over again. Gold love this, and we love understanding this, because once you understand it, you can catch the biggest trade possible in gold. Now you can see this in any time frame. I sincerely believe that this free gold trading secrets was helpful to you. If you find value in it, don't forget to smash the like button, and also check out if you subscribed or no. If you haven't, do it now. There is a lot of content including live analysis, live trading session, and live educational content like this one I'm releasing every single day. Thank you for watching. Also watch these two videos on gold, will change your perspective about trading. I'll see you soon in my next video.